To me, this is the beauty of the country. We are a mess, but we move forward. And when you think about that, this is one of the reasons why we as a country are able to create incredible companies, innovation, entrepreneurialism. Look at the two of us.
Well, Larry, one of the things we're doing with this podcast is meeting people at places that are important to them. And here we are at BlackRock's headquarters in Hudson Yards.
Yes.
In Manhattan. And I know that this is an important place to you, but your beginnings are in Southern California. Tell us a little about your journey from there to here.
Well, actually, I never saw snow fall before growing up in Southern California. And I knew I wanted to do something different. I knew when I graduated undergraduate, I knew I did not wanted to go right to work. And I was able to go right from undergraduate to grad school. And that afforded me 2 more years in school to make a decision what I wanted to do. And through that extra 2 years of getting my MBA, it opened up so many different horizons. And actually at that time, that's how I learned more about Wall Street. I had no concept of what Wall Street was. My father was a very active investor for his whole life, and he left a pretty big mark on me and on the virtue of long-term investing. But through that 2-year process of getting my MBA, I did a lot of soul searching. Maybe there's something more than beyond Southern California. And I met a couple of people in the industry, and I went out in January 1976 for a bunch of interviews in different firms in Wall Street. I ended up at First Boston, and that's when I actually saw snow fall for the first time when I was interviewing here in January. But importantly, I just became really excited and engaged about the opportunities to be in the markets. And this was right after, in 1974. That's when Wall Street was given the notice that you can have fixed price commissions, and it was pretty much of a pretty stark recession for a lot of the Wall Street firms. And by and large, most firms, even at that time, did only advisory business. They did not have a balance sheet. And for those history buffs related to Wall Street, in 1976, I think the sum of all the Wall Street firms' capital might have been $200 million. I mean, it was very much of a cottage industry. The training program that I started at First Boston had 14 people. So it was really small and unique, but I selected First Boston because I wanted them to be in trading, and that required me to be in New York. And it was a very difficult first year of coming to New York. It was very different than Southern California. But over the course of a year, I came to love New York City. I came to love the meritocracy of the firm and the ability to grow. But also I found the whole idea of capitalism and what it can do, and how, everyday people can build a life and a career in this. And if you are able to grow and learn and build, the sky's the limits. And so it became a very quick journey for me. But importantly, I knew really within the first 90 days of being in New York and taking this job in trading, that it was something that I was fascinated, something that I actually really enjoyed. And then I actually became pretty good at it.
Yeah, it seems like the results would indicate that. Now, we met last year. You told me a little about how the seeds for BlackRock came out of First Boston and the team that you developed, the leadership team. How did BlackRock evolve from your days there, and how does it influence your thinking around the way you run BlackRock and your leadership team?
Well, it really goes to my almost 12-year journey at First Boston. I started at 23, right out of grad school. At 27, I became the youngest managing director in the firm's history. I ran a department. As I said, was really successful really early. At 31, I was on the executive committee of the firm. And at 34, I was a jerk. And, the journey was we were making lots of money, way beyond any imagination. We were children in a candy shop. It was crazy times. The whole Book of Liars poker talked about First Boston and Salomon Brothers, the war that we had, and the competitive edges that we had between each other. And we were making so much money, but we had really inadequate risk controls. We had inadequate knowledge of the risk we were taking in making all that money. And I could look back and said, we probably should have been fired for making too much money, because the amount of risk we were taking to make that type of money was probably not a great risk reward. But because there was no risk analytics there, the firm actually gave me more capital to put more money to work. And then obviously in 1986, in the second quarter, after a record first quarter, we lost $100 million, and then the firm woke up to the amount of risk we were taking. Now today, $100 million is not that big a loss. Back then, that was a lot of money to lose. And I actually, Peter, never forgave myself. The fact, that I allowed myself to be put in a position to taking on this type of risk without the knowledge of the type of risk we were taking. And it was easy when you were making all the money and when you're right. But when you have a huge levered balance sheet, as we learned over the years, especially in the great financial recession, when you have that much leverage, if you're wrong by a little bit, it could be the, death, in terms of a position. And I just could not believe I allowed myself to not understand what we were doing and how we were doing it. And so that was June 1986. And it literally took me a year and 3 quarters to think about what did I want to do next. But I knew from that experience from June to September and try to mitigate and correcting the problem. And my soul departed the firm. Because getting back to the foundation of BlackRock, I believed in team. I believed when there is a fire, we run in it together. We hold hands, and we put the fire out together. And that was the whole foundation of what I thought partnership's about. And I actually felt very isolated, and a lot of finger pointing and all that stuff. And when you made a lot of money, then there was a partnership. When you lost money, there was no partnership and no support. Now, my team, I was running all fixed income then, and the team was very supportive and all that stuff. But it was we had the glue, but above me, there was very little in terms of compassion, assistance, one team, one organization. And I knew I was going to leave, but I did not know what I wanted to do. And I had many different opportunities to go back to another Wall Street firm and do that. I said, I'm not doing that. I'm not repeating this. I wanted to learn something else. And it was very clear to me as we were building new products in the mid-'80s, we had more knowledge of those products and the weaknesses and the strengths of these products than our clients. Our clients were so dependent on us to help them understand it. And it was very clear to me that I said, if we could develop our own risk analytics on the buy side and really understand how the risk we were taking, we could create a new buy side firm. And so I like to say the ashes of my failure at First Boston was the fertilizer of the beginnings of BlackRock.
And you still have the same partner group you started with, is that correct?
There were 8 partners who joined. I resigned on a Tuesday. I stayed there for a couple of weeks to help out a transition. The weekend, right after I resigned, I had an open house at my house, and I literally had 75 people work for me and wanted to know what I was going to do and can they come with me. And, I had the ability to hand choose the type of people we thought would be helpful in starting this company. And fortunately, 2 out of the 8 people came from technology. So the whole idea was to develop our own risk analytics to understand what we were doing. And that was the beginning of a great journey. Now, I had 2 entrepreneurs who were willing to help finance me. Back in 1988 now, we had Black Monday just 4 months earlier, in October 87. And which was the largest decline, I think, up to the Great Depression. So it was not something that people would readily do. But I had 2 entrepreneurs who were willing to finance me to start the company myself. And I honestly, that whole journey of that year and a half trying to decide and the lack of partnership that I was experiencing, I did not have as much confidence as I should have to start my own company. I did get to know Steve Schwarzman and Pete Peterson when they started Blackstone in 1986, and because they used First Boston to help raise money. I helped them raise money for their first fund, and I got to give Steve a lot of credit. He had more trust in me than I had in myself. And, I was asked to become the fourth partner of the Blackstone Group. They provided the capital for us to start, and that was the beginning of the platform. We were very independent from Blackstone, but our name was Blackstone in the early years. And from the first month when we started the firm, people came to us and said, "We want to help you." And within the first 80, 90 days, we were making more money than than our expenditures. I mean, it was a big surprise, and a lot of it was just the reputation that I had. But we won our advisory client, first and foremost, of a big savings loan that was acquiring another savings loan. They needed somebody to help them analyze all the portfolios, and we did that. Then in a very short period of time, we were able to raise our first dollar, and that was not in the United States. The first client we ever had on the asset management side was a client in Japan that we had prior relationships with. And then probably the greatest surprise to me was the support I had from all my competitors at First Boston and how they came to me and how they wanted to help out. And so within our first 4 months as a firm, we were able to raise over a $500 million closed-end fund. And that was the Wall Street firms trusted us that even though we didn't have a track record, they trusted in what we were doing, the risk management. And so, quite frankly, we were making money within the first 90 days of the firm, and we never looked back.
And here you are, you're now running the largest asset manager in the world.
Right.
And you're considered a thought leader. You write extensively. You travel all over the world. When you're formulating your thoughts, there's an optimism that comes through, but you do have a lot of concerns around society in general. How do you see the world today? What do you think the key issues, key problems are? What are you optimistic about there?
I am an incredibly long-term optimist. Human beings solve problems. We solve problems by identifying the problems. And so what people get so mixed up is, if you read the newspapers or read blogs or listen or watch a lot of social media, it's full of ugliness by and large. I look at the ugliness by and large and say, okay, we're talking about problems, whether they're social problems or economic problems or political problems. And in most cases, we solve those problems because we are exposing them, we're discussing them, and we mitigate them. So what I truly worry about over the long run are things that we don't talk about. But so I get heartened that we as a society, and with all my travels around the world, the beauty of the United States is, and that's the beauty of the United States, it is the democracy of thought, democracy of ideas, but also the whole foundation of free speech. I mean, a lot of it may be hateful or hurtful, but the reality is that's a process that over the long run that, we could see over hundreds of years, the United States is an absolute political mess. There's no change today. Like, people tell me all the time, whether they're from a red state or blue state, it's never been worse. Well, that's not true. I mean, the United States was in much worse shape in the late 1960s with the Vietnam War. There was great divisions then. You go back and read the history of the United States, it is a mess. And so to me, this is the beauty of the country. We are a mess. We expose our messiness, but we move forward. And when you think about that, this is one of the reasons why we as a country are able to create incredible companies, innovation, entrepreneurialism. Look at the two of us, where our journeys were, and where we came from. You can't do that anywhere else in the world, and this is why
that is true.
This is an incredible place to be an entrepreneur, to work hard, And if you have something unique and meaningful that, you could build your company into beyond your wildest imagination and dreams. But overall, we find solutions. If you go back to almost every crisis during our lifetimes, after a period of time, the markets reassess itself and then start rallying again. I could go back to every part of my 49 years being in Wall Street now, that the optimists are the long-term winners. Now, in a short run, a pessimist can really win in the short run, but generally there are very few pessimists know when to reverse their positions.
Is there anything, though, that you see in today's landscape that gives you pause around that permanent optimism, like the national debt?
Yes. Our deficits are out of control. To just put it in perspective, in the year 2000, after 223 years of a nation, the U.S. deficits were $8 trillion. Today, they're $36+ trillion. We raised our deficits by $27 billion over the last $28 trillion over the last 25 years.
And $1 trillion every couple of months now.
And now we're going at a rate of $2 to $3 trillion a year. 30% of our U.S. treasuries are financed by foreigners. And as other countries start developing their own capital markets, as they grow, and as they are focusing on making their country great again, as they are focusing on maybe it's better to reinvest in our country than to diversify and investing in the United States, which that trend is starting to happen, it's going to be very costly for us to finance this debt. The only way we could get out of this problem is we have to grow the economy. We need to grow by 3% a year for the next 10 years. That's really hard. But if we unlock private capital, if we unlock the markets, we reduce permitting processes. If we accelerate depreciation, the amount of money that's sitting in bank accounts. Money market funds are now over $12 trillion. The amount of money that's sitting, earning a short-term return, but if we could get more and more of that money invested in real assets. And my theme to everybody here in the United States, but in every other country, when you give your money to a bank, you are a lender. Lenders make very little money. Over hundreds and thousands of years, the people who build wealth are owners of real assets. What I try to tell everybody, whether I'm in India or here in the United States or any other country, grow with your country. And so what I'm trying to tell all the Americans, we need to get more and more Americans to invest in real assets, whether it is in the stock market or whether it's in their own home ownership or other things. And I think it's really important. And you could start with $20 a week or whatever it takes to start building that. But an interesting point is getting back to just building up your nest eggs. If you could earn an extra 50 basis points over 30 years, 50 basis points, it doesn't seem like that much. Your end pool of money is up 18% higher than if you didn't earn that extra 50 basis points. But getting back to the U.S. deficits, Peter, they're frightening. They're going to be absorbing more and more of our discretionary spending. We're too dependent on foreign purchases. And when we had a presidential election last year, and even today, nobody in Washington is really talking about it. They give lip service. And so getting back to my whole idea, we solve problems by exposing problems. We're not solving this problem. We're not talking about it. And both parties are guilty. I'm not picking at one person or other. The irresponsibility of our federal government to spend this type of money, $27 trillion over 25 years. This is at a path that is unsustainable unless we grow our economy. And so we need to find ways of unlocking private capital, giving confidence to the $12 trillion of money sitting in a bank account, giving them hope that, you could make a lot more money investing in the markets over a long horizon. You're going to make a lot more money owning real assets of some sort. And if we could get more people to doing that, whether it is the amount of trillions of dollars we're going to need to digitize our economy, with AI, the need to building power grids to find reliable, dispatchable energy. Maybe that's nuclear or it's going to be gas. It's going to be, at the same time, focusing on new technologies, whether it's going to be solar or other forms, hydrogen. So all of this is in the mix. And so this is the opportunity. This is why I'm so excited about where BlackRock is and the opportunity we have in trying to bring these investments to the forefront so our investors can earn that type of return that they can have retirement during, with dignity and decency. But we need to have every member of our government to wake up to the idea that these deficits are threatening our future. They're threatening the value of the dollar. Let's be clear. If we were not the country whose currency is the currency of the world, we would not be able to have these deficits. But because we are the currency for the world, we are accorded a privilege that no other country is accorded. We should not lose sight. It is a privilege. It is not a right. And I think too many men and women in Congress believe it's a right, not a privilege. And I think we're jeopardizing that right.
And it's not permanent, and I think we get away with it because there's no alternative right now.
But as we move towards more crypto strategies, more stable coin, I was in Asia 2 weeks ago, and the countries are all talking about creating their own stable coin because they're worried about the increased dominance of having a dollar stable coin worldwide. So they're all going to start their own. Getting back to, they're going to focus on their own economy, and they're going to digitize and create their own stable coin and digitization of their currency. So there are, and I do believe things like Bitcoin will play a big role in this too. And I know our government is very in favor of this. We just had the Genius Act that was signed last week. But the reality is,
these names.
But if we don't handle this properly, we are going to lose this right.
I think we've got to your point, we have a growth problem, and the other element is we have a spending problem, which has got to get under control one way or another, and
totally
an absolute bipartisan disaster. And I talk to our clients all the time about what you just said earlier about being an owner versus a lender. There's 1,000 investments. BlackRock's in every single one of them.
Yeah.
End of the day, you're an owner, you're a lender, and
That's
wealth is created.
And don't be a lender.
And don't be a lender.
Lenders
Wealth
are for
is
short-term moments when you're less optimistic.
100%. You brought up cryptocurrency, and your personal belief around this or comments on this have certainly evolved over the years.
It did.
So tell our audience what you thought in the beginning, what you think today, what's BlackRock doing?
I didn't believe in it. Actually, in the early years, it was a domain of money launderers and thieves. Obviously, if you're at a corporation, you were held ransom with some type of code, you paid in Bitcoin. So
I can tell you this still happens today.
It still happens.
Every 6 months, one of our clients' business, someone hacks it and wants Bitcoin as a ransom.
So I said that. I said in 2017 on a panel sitting next to Jamie Dimon, who Jamie still today is against it.
Very much so.
But right around 2021, around COVID, when I had a little more time on my hand, I started talking to a person who is a huge believer in it. So it was me. The one thing I was throughout my 49-year career, I'm still a student, and there are times I'm wrong. And so during this period of time, I brought in a bunch of different people, talked to them, learned more about it. And I remember one time I met this one woman who was providing illegal jobs for Afghani women. Women could not work. With the Taliban in control of Afghanistan, women are prohibited to work. And this woman was trying to find a way to empower and employ women in Afghanistan. The Taliban controls the banking system, so there's not a chance that she could pay them. But she started having them code. They were all coders. They were able to code for different companies out of Afghanistan, and they were being paid in Bitcoin. And so I started this journey of learning of different applications and why. And I studied why are people buying it. And much of it has to do with, and it gets back to our deficits, many people own Bitcoin because they're frightened of the debasement of their financial system, of their currency. Many people own Bitcoin because they're frightened of their security. 20% of all Bitcoin holders are Chinese. Okay, then I don't, so you own it. To me, Bitcoin is digital gold. You own gold for the same reason. But it's even more transportable because you have authenticated ID, and then you have all this stuff, and you could move it around. And so around 2023, 24, I became a real believer in it. And then we took a very active role. And we used to bring in all these different people who were big believers in it, like Michael Saylor from MicroStrategies. I mean, Michael came to our office when the stock was in the teens, but he was a huge believer in it, transformed his company. I mean, I could just say all these different people came in and talked. And then we became, we became a leader in working with the SEC and in trying to move forward in this. And fast forward now, a little more than 18 months when we first started creating a Bitcoin ETF. Today, IBIT is $86 billion. We're, at least 40% of the market today. Our Ethereum ETF is now $9 billion. We are the collateral manager for Circle, and we believe that that stablecoin is going to be a major component of how economy will work, and Bitcoin is going to continue to be that alternative to gold. And if there's more debasement on currencies, whether it's the dollar debasement or other places, there's going to be more demand for Bitcoin. And if there's more global instability and you worry about your security, this is an asset that you're going to own. And so I look at most of BlackRock's money that we manage. We manage money because we're hopeful. As I said, you own real and hard assets because you're hopeful that over a 30-year period of time, the compounding of those assets are going to be worth a lot more than being a lender. And time, almost every period of time in man's history, that has paid off. And I look at Bitcoin as my hedge. It's a modest hedge compared to all the money we manage, but it is I believe it's legitimate. And it can play a role, no different than tips. Why would you own a tip if you're heavily oriented to fixed income? You own tips because you're worried about the value of fixed income portfolio, that inflation is going to rise, and you're going to offset your fixed income portfolio by owning tips. I mean, these are just balancing a balancing asset to fit into a whole portfolio.
So if this is a fear-based asset, let's call it that, what is it about the market that concerns you the most? When you look at the market today.
The crypto market?
No, just the overall market.
There's very little that I'm worried about in the overall market today. I hear the narrative. There are so few publicly traded companies.
Yeah, cut in half, right? 8,000 to 4,000 or so.
But I think that's a natural evolution. When we bought BGI in 2009, most companies said you can't be over 10% of a portfolio. So that was only, 16 years ago. Today, BlackRock manages, in many cases, 100% of our clients' portfolio. And so the whole evolution has changed. And I think we as consumers, but we as, people in business, the most valuable asset we have is time. And if you believe that's only going to get more valuable, you're going to use fewer and fewer organizations to be part of your life, or fewer and fewer retailers. And so if you take that, it should not be a surprise we went from 8,000 companies to 4,000 companies. That being said, the 4,000 companies are worth 3x of what the 8,000 companies were worth. So we're building more giants in every industry. I mean, I look at the success of Walmart. I mean, what Walmart has done, alongside Amazon, but in from a traditional retailer, Walmart has gone from strength to strength to strength. They are using AI more than any other retailer, and they understand their clients better than any other retailer by understanding what each client is buying, when they're buying it, shelf space, the whole idea. But there's a great example. They're so much more efficient in 2004, BlackRock was public now for 5 years, but in 2004, I would say 90% of the public asset managers had a higher market cap than BlackRock in 2004. Today, all the public asset managers who trade public securities, the sum of them is not even worth half of BlackRock. And so, you're seeing the scale operators. You're seeing it in the transformation in the RIA channel and what you're doing. I mean, we're seeing more concentration because scale provides us with more tools to help our clients. And so I'm not worried about the shrinkage of public companies. And look at most, today, because there's so much private capital, private firms can stay private longer.
Right, for sure.
But that being said, in most cases, most private companies ultimately are going to go public because whether the founder or the leadership team wants to have a higher, monetized somewhere, or there might be a founder succession issue and all these issues. And so I'm very relaxed about that. But I do believe what's the magic about the U.S. economy is we more rapidly weed out the weak links. And we're building stronger enterprises, better enterprises, more connected to their clients than ever before.
I think that's completely true. I look at, when I talk to my clients, I go back to the 80s and say, remember all the restaurants in your neighborhood, 30, 40 of them, whatever there were. Very few of them are still standing today. But the ones that struggled, they might have lasted 5 years, 10 years. Today, it's not uncommon for a restaurant to open up and be gone a month later or a year later.
Yeah.
It's the same capitalist process. It's just moving so much more rapidly. And we're really moving more towards these winner take all.
And for some people, that's very destabilizing, and I get it. And this is why we have such, so much populism in our country today, because there's a little more fear. And the AI and the technology change is going to eliminate a lot of white-collar jobs. At the same time, it's going to create massive amount of highly paid blue-collar jobs. We are going to have a massive shortage of electricians, and AI electricians are paid about $150,000 a year. We're going to have a shortages in so many different businesses right now, and so this is why, yes, AI is going to shape the world. It's going to create a lot of uncertainty because there's going to be some big winners and big losers, and this is why we need to talk about this stuff and help shape families and their children. Where should their careers go? But the one thing I would say to everybody who's listening, the one thing that AI is not going to change is human touch. So in reality, we're going to need more people who provide human touch than ever before, especially in an aging economy. We're going to need more nurses than we have today.
So in a world that's going to be more isolated, more tech-driven, the highest demand roles will be the people that are high emotional intelligence and able to deal with other people.
Absolutely, across the board, more than ever.
You've talked a lot about AI. What do you see AI's impact at BlackRock today and in the future? What do you think the big changes will be?
Well, because of our scale, and because we have our analytical system called Aladdin, where many of our clients utilize, and actually many of our competitors use it. We believed advanced data analytics were going to be an important component of who and what we are. In 2017, we created an AI lab and called it an AI lab at Stanford University, 2017. Because we believe that the analytics, the algorithms associated with big data analysis is going to create a differentiated, ideas to produce better net returns. And our systematic equity team has proven that. We believe that using better AI tools will create more efficiencies within the organization. I look at just BlackRock over the last 5 years. Our assets are up about almost 40%. Our headcount's up about 5%. And so we've created a lot of efficiencies with better analytics and data. And so to me, AI just creates better and better productivity and efficiency. And getting back to the United States and the 3% growth, the only way we're going to be doing that is through better productivity. And productivity is going to be heavily oriented towards the implementation of AI across all industries.
Well, capitalism has been a big theme of this conversation, and you've written extensively about it.
Yep.
How concerned are you, if at all, about the rise of socialism across the United States? I mean, we're sitting here in your backyard.
In New York, yeah.
We've got a socialist that seems to be the lead for mayor. Do you see this as temporary because of like I see it as a reaction to inflation and what's happened since COVID, but what do you see it as? What's caused this, and how concerned are you about it, if at all?
Well, I'm always concerned about extremism, whether it's left-wing extremism or right-wing extremism. But I actually believe the extremism is something that we got to be focused on. But I think through this extremism, whether it's far-right extremism, far-left extremism, it brings both Americans to the center. And so over time, I'm less worried. Getting back to the 1970s, the social protests was so vivid, and the division between the men and families and the women who were in the military and fighting a war that a lot of Americans did not believe in, and the protesting. I mean, this is what America is all about. It is about you think about McCarthyism back in the 50s, and the fear of communism there, and all these different reactions. As I said, we're a messy country, but it's through the mess we glow and we find solutions. Our job is to make America stronger. Our job, most importantly, is to make our $12.5 trillion of client money to put it to good work, to good use, and with great future of opportunities. So, we have to deal with everybody from the far left to the far right. But our job is to work with everybody and find solutions, and importantly, as a fiduciary to each and every client and their money, our job is to find solutions. So, and that's who America is. We're pretty a divided country right in half, and it's all in the edges. But that's the beauty of America. And our job is to find solutions.
And people do just listen to what they want. If you're on the right, you're reading the Wall Street Journal, watching Fox News. If you're on the left, you're reading the New York Times, you're watching CNN, MSNBC. You just hear what you want to hear all the time and diminish the other side's views all the time, unfortunately.
Which leads to skewed views. Yeah. So what I do, I read 5 different newspapers almost every day. And I then, because I want to see the journey of both sides, and it's really remarkable to read the same narrative of something that happened with a totally 2 different lenses. It's funny to read things that I was at and participated, and you get 2 different interpretations that are far extreme, and unfortunately that's where we are. But for us to be a fiduciary to our clients, we need to hear both sides. We need to work there, but we need to move beyond that.
Yeah, it feels like you have to triangulate your way to the truth today. Over the course of this conversation, you've met the President of the United States a month ago. You're meeting the Governor of New York tomorrow. Last time I visited you in your office, you had a high-profile ambassador in right before me. I think I'm sitting right now with someone who has more behind closed doors meeting with some of the most powerful people across the globe. What is happening behind closed doors? What are the concerns that emerge, or the narrative that emerges, the commonality that emerges from these conversations across the globe?
Well, probably in the last few weeks, I've had 4 to 5 different heads of state conversations worldwide. And quite frankly, they all have the same desire. How do we make our country better? And everybody has that, you're being elected in every one of these democracies, chiefly, and they're trying to make it better. When I go to the Middle East, I see the heads of state there, and they're not necessarily a full democracy, but they are really trying to make their citizens have a better future. So if you start with, they all have a common desire to broaden their economy, to broaden the success of the economy, to diversify their economy so they're not dependent on one industry or another. And so they all ask the same type of questions, by the way. And right now, a lot of questions are related to, where are tariffs going? What does it mean? How can we play it? But I get back to every country and said, because almost every major democracy in this world has huge deficit issues. And they have and most of these democracies have aging populations. So this cannot end well unless we grow. And so I'm very pragmatic. I'm willing to listen to everybody, but there is a common thread with every conversation you have with every country. How can we make what can BlackRock do in helping us lift our country? How can we create better jobs? How do we create more certainty? So we're the largest retirement manager in the UK. Okay, so we have a big social responsibility. We're the largest retirement manager of non-Japanese banks in Japan. I could go across the whole world, our role that we play in. And so as a fiduciary to each and every client, our job is to try to making sure that we're giving them the best advice. And it's all about having them focus on the long term. It's not about a trade. It's not about the moment. It's not about the events of the week. It's not about a tweet, and so there's a lot of common themes about how to grow and how to build. And as I said earlier, for the United States and all the major democracies right now, they have to find ways to grow, unlocking private capital. Now, in the United States, that's happening faster than Europe. Europe's waking up to that idea. Japan is opening up to that. They doubled the size of their tax-exempt retirement account a year and a half ago, and it's no accident you've seen this big rise in the Japanese stock market. Why? Because more Japanese are participating in it, and they're investing in it. Instead of keeping their trillions of dollars or trillions of yen sitting in a bank account.
Mm-hmm. Larry, one last question. What's your legacy? How do you want your kids to think of you 20, 30 years down the road?
Well, my kids and my grandchildren, that he was a nice man. That's probably nothing more than that. I don't think my accomplishments are something that, that's less important. But was I there for them? Did I help them build out their lives and their future? Was I there to give them advice all the time? And to me, providing a financial backstop is not how I want to be remembered. I want to be remembered that I gave them the tools to lead a good, healthy life. At BlackRock, most importantly, my legacy has to be is the next generation of leaders. So my whole idea is to leave at the top of my game, but to leave with leadership behind me that are doing the job better than I ever did. That's the great legacy.
On that note, thank you, Larry.
Thank you, Peter.